assets under management. We are very excited to have a special guest and business partner that we've been working with for a long time. Shawn, can you introduce yourself and talk about your role within Craft Capital?
Yeah, thank you, Misha. Gabriel, thank you guys for hosting me. My official title is Vice President of Treasury. I kind of half jokingly refer to that as Vice President in charge of a few things. I kind of do whatever Gabe needs to get done. When people ask me what do I do on the team, my first response is usually, I'm kind of the Swiss Army knife. They pull me out when they need something done, and I go do it. But my primary role is really focused on working with investors, which means also working with CPAs, because eventually investors get K1s because eventually they get money, which is why they're investing. So, we try to smooth over all that process and make it as friendly as possible for the investors.
Awesome, Shawn. So just to kind of walk you through where we've been, we've talked through the first step of how to analyze an operator, make sure you have, or even before that, developing your real estate strategy. From there, finding the right operator, analyzing them to make sure that they're able to execute on that strategy. And then Gabe did a great session about actually analyzing an individual deal. Now we want to walk the listener through literally what's the step-by-step process for them to invest in their first property if they've never done this before. So if they've done those first two things, Shawn, what should they be doing first when they to actually invest into a deal?
Well, I remember back when I did my first investment, I actually read the PPM, which I highly recommend that everybody does. Once you've read it and you've gotten a little familiar with it, you're probably going to want to take it to an SEC attorney to get an informed opinion. Because honestly, the first time I read a PPM, it scared the hell out of me.
What's a PPM for the listeners' knowledge?
That's a great question. It's a private placement memorandum. It's a document that allows us to offer an SEC security, which is just a fancy way of saying we're offering you a chance to invest money and get a return on it based on no effort of your own. That's the boilerplate definition of a security. And this whole process is governed by the SEC, the Securities and Exchange Commission, because we're offering you a security. Unlike, formal companies, we don't have to go through a whole process of registering, and going public with the offering because it's a private offering. And there are certain chapters in the SEC code that allow us to do that. That's probably another 2 or 3 podcasts right there, guys. But getting back to what you as an investor need to do, the first thing I would say is take a deep breath. Don't let all of this overwhelm you because it's a lot of information and it comes very fast. And I'll be totally honest with you. I've been investing for over a dozen years. I still learn new stuff almost every day. So, don't let the amount of information, convince you that, that's too much work. And these guys both know, they've heard me, I don't like the term passive investor. You as an investor should never be passive. The income can be passive. We all want passive income. What we don't want are passive investors. We want people that have gone out and gotten themselves educated. You're listening to this podcast, so you're already a step up on a bunch of people. But that makes you a sophisticated investor. You understand what it is you're investing in. I mean, whether it's this podcast, whether it's books, tapes, going to seminars, finding a coach or mentor, whatever it is that works for you, educate yourself on the investment. That's first and foremost. And to put it at a very high level, I don't care what you're investing in, but you need to be able to answer 2 questions about it. The first question is, how does this thing make me money? In our case, multifamily real estate. You need to know how the investment works and how you're going to get a return. The other question you need to know the answer to is, how can this thing lose me my money? Because that is a very real possibility. And if anybody tells you otherwise, they're lying to your face and run the other direction. Matter of fact, that PPM we were talking about, there's about 14 or 15 pages in there. If you read it, they're all reasons you should not invest in this deal. Fire, flood, famine, locust. hail, you name it, they're all in there, and plus some other stuff. So, like I say, get a little bit of education, and take that PPM, talk to an attorney about it. And I did that. I spent some money and had an attorney review that first document.
Mm-hmm.
It was the best money I ever spent. I've gotten a massive return on that investment because that was investment in my knowledge.
Mm-hmm.
The whole that whole section of things. The thing the attorney told me was, he said, you shouldn't let these 14 or 15 pages scare you unless they're missing. He said, because if they're missing, they're trying to hide something. And what it should prompt you to do is go, hey, Gabriel, how are you as a sponsor going to mitigate these 14 or 15 pages of risks over here? And the simple answer is about 80% of them are handled by having the proper insurance on the property. The other 20% is by doing a really thorough due diligence so you really know what you're getting into. Can we account for everything? No, but we try our best.
So someone's just read the PPM. They said, okay, I've done it. I've looked at the potential issues, and this seems like something that I want to invest in. What happens next after that, Shawn?
So once you've analyzed everything and you're comfortable with the deal, and more importantly, comfortable with the team, your next step would be to get registered with their investor portal. Almost everybody uses an investor portal now. I won't bore you for the next 20 minutes talking about how we used to do it the old school way, where you actually got a physical paper copy that had a number on it, and you had to sign it and FedEx it back and forth. We could go on for hours about that, but everything's done electronically now in a portal. And once you log into a portal, you need to set up a profile. And that profile has a lot of personal information in it: your name, your address, your phone number, your social security number. So you want to make sure the team is using, a reputable portal that has bank grade security like Cashflow Portal, which is the one we use. And I highly recommend, by the way. I've actually started telling sponsors that try to get me to invest as an LP in their deal, if you're not using Cashflow Portal, don't even bother calling me. So the next step is really, get in the portal. Some of the questions the first time through can be a little confusing or almost intimidating, because they want to know, there's an investor questionnaire that's, how do you know the sponsors? Have you invested before? Are you an accredited investor? And then it can further be complicated. Are you investing as an individual? Are you investing as a joint owner? Are you investing as an entity? Are you investing through a trust or an LLC? Or maybe you're investing IRA funds. So all of those require different answers. And what's not always clear is that you can actually have multiple profiles. Each one is different. Like I have a profile for me and my wife, which is joint. I have one for our business, which is our holding company. I have a separate one for our solo 401k that we invest our IRA or 401k funds through. Each one of those has different sets of information in it.
Yeah, it's a really smart idea about segmenting it based off of your specific needs. So someone's gone into the portal. How did they actually transfer funds? Is that something where they're transferring funds directly to the operator? How does that work?
That's a great question. Depending on how the deal is set up, Cashflow Portal can accept funds multiple different ways. And what happens is, and it's not really Cashflow Portal accepting the funds, right? It's our bank.
Mm-hmm.
We typically use Chase Bank because they're easy to work with. We connect our owner's account to Cashflow Portal using a system called Plaid. It's widely accepted throughout the banking industry for transfer of funds. When we link that account, we always set up the option. Some people like to wire just because that's what they're comfortable with. It's faster and easier if we do it as an ACH. And we can also, if it push comes to shove, take old school paper checks. What we do with those is we actually tell people, take the banking information that you received in the wire instructions, go down to the Chase Bank near your house, because I guarantee you there's one, they're everywhere. Go in there and deposit that check into our bank account. And one thing I will tell people is make sure that your name or your entity name is on the deposit slip. Otherwise, I have trouble matching it up at the end of the day when I go to balance everything.
I'm sure a first-time investor going through this process is going to have moments where they are fearful, or they're going to be nervous that they're going to lose the money or something's going to happen. What assurances did they have that that process is going to go smoothly? Or how are you able to kind of communicate to first-time investors of potential concerns or things that may come up from the first time in the process?
No, that's a great question. What I do if excuse me, if I have one of my investors and I know they're a first-time investor, I will literally walk them through the process. I offer to get on the phone with them if they have questions, and I do that for other people's investors as well. If people have questions about Cashflow Portal, but one of the things I'll say, just from a high level generalization, is that your money is going through the banking system. We don't actually touch it until it gets into our account. So what happens is, if we go through the process and let's say everybody's done the paperwork, the investor has signed saying, hey, I want to invest this much money. I will look at it and review it and make sure everything's like it's supposed to be. I will countersign it, which means the entity accepts that investment. Because it is a private placement memorandum, we have to accept each individual investment. And so when I countersign it, that means I've accepted it. At that point, I will also transmit a link to the wire instructions, or if they've set up their account for ACH, it'll actually initiate the ACH transfer. Found that out the hard way. Matter of fact, it was my neighbor was investing in our last deal. He had set up, he wanted to do ACH, and as soon as I countersigned it, it tried to do the ACH draw from his account. Well, he hadn't finished moving money yet, and so it bounced. Fortunately, he's on very good terms with the president of his bank and got it smoothed over, so it nobody got any fees or any, but sometimes things like that happen, and you just have to work through it and reach out to your banker. But for the most part, 99% of our investors, however they invest, usually ACH. We have a few people wire. I don't think on our last investment we had anybody come in on a check. The one before we did, but it's a pretty straightforward banking process. Once you get through all. The hard part's getting through all the questions in Cashflow Portal and getting the paperwork done. That's usually the intimidating part to most people.
Yeah, I could imagine, especially the first time doing it. I feel like we need to create just a separate video where we, show Cashflow Portal and just kind of walk through it for someone so that they're
yeah,
more
I
familiar
agree.
with it.
And Cashflow Portal has a lot of good, useful information online as well. But it is easier if you can just.
You got such a good voice. It'd be great to have your video in the corner walking people through it. So that's great. I mean, I think we've covered the steps from, hey, I want to invest in a deal, to physically transporting their money into the deal. Briefly, can you talk through what someone should be doing after that? So they've sent the funds in. What are their next steps in this process?
So once they do transmit the funds, they will get an email from Cashflow Portal saying, hey, we've confirmed receipt of your money. If for some reason they don't see that, or maybe they missed it, whatever, I always recommend that you verbally follow up and make sure that, hey, did you get my money? For our larger investors, I'll do a courtesy text to them going, hey, yeah, you invested $1 million. I'm going to take time to send you a text and go, thank you. Yes, your money is received. So, they you want to invest $500,000 or more, you'll get the white glove treatment.
Yeah, fair enough.
No, seriously though, I give the white glove treatment to everybody, whatever they're investing.
Yeah, and I kind of got that from this conversation that you're, and I've seen it firsthand, Shawn. So I've brought you investors, and you've walked them through step by step how to get there, which has been awesome, and that's the kind of service that we want to provide. Well, as well as, I guess my question is, once someone invests, what should they expect from you or from our team in terms of communication? What does that look like? How do they know how things are going over a
Well,
period of months after
yeah,
that?
again, another great question, Misha. As you very well know, those first 30 days are usually more than a little busy. So what we try to do is let everybody know, our plan is to do a monthly update. So you should expect to hear from us every month, status of the property, status of the financials. It usually takes about a month and a half to 2 months to get everything kind of smoothed out, get the financials set up and running, and actually have enough data that it's meaningful to, give you something other than, hey, yeah, we took over the property. I mean,
Yeah.
you'll get that email as well, is, hey, yeah, we took over the property. We officially closed. Your investment is officially at work. Thank you. And we're again, like I say, monthly is our established communication.
Yeah, I love it. Gabe, any final thoughts or questions for Shawn?
Yeah, I got three quick ones for you, Shawn. I think some of the things that come to mind when you think about this topic is what happened to me for a good year and a half before I made my first real estate investment of any kind, and that was analysis paralysis. So, we talked a little bit in the intro about knowing the basics. How long do you think that process would take somebody? Days, weeks, months? Like, what are we talking here?
I hate to give you the standard statistical answer, Gabe, but it depends. One of my big things when I'm talking to investors is to make sure they understand their own personal risk profile. The simplest way to describe that is if I'm talking to Misha and Misha's going to invest, and we'll say, hey, Misha, if you're going to invest 100K with us, you need to understand that 100K is not going to be liquid, and you're not going to have access to it for 3 to 7 years. And, you need to understand that and be okay with that, knowing that, hey, yeah, I may have this chunk of money over here, but it's tied up. It's not like you can walk down to the bank and draw it out.
Yeah.
It's, like right now, somebody that invested 100K in Avanti, we can take them down and show them, hey, you upgraded this unit. You helped put on part of the roof. You helped repair some of these valves, and that's where your money is right now. It's in the building, literally. Yeah. And, they need to be comfortable with that. For the first part, did I answer your question?
Yeah, I mean, that's it, is that it depends. I think maybe my answer to that question might be, maybe a month of study, and then for a specific deal, a week of consideration after you've had a chance to meet one-on-one and kind of align over, at some point during the week with the key sponsor that's bringing you into the deal, to pepper them with questions, kind of go back to the drawing board to discern whether this thing has the downside risk, meaning like I could lose my money, and the upside, opportunities, meaning, yeah, this thing's going to be the return I'm looking for, and then come away with an answer in about 7 days is pretty typical for my investors once I've gotten a chance to really walk them through, or they joined the webinar, in terms of what we're doing. So we typically look for an investment within about a week's time frame once we find people that are truly interested and sophisticated. But when you're doing your very, very, very first one, I think taking a good 3 to 4 weeks, maybe a full month of learning about the topic and listening through an amazing podcast about your first investment, and poking around in some books might be really helpful. So what we'll do in the show notes for this episode is put a healthy dose of books and recommendations for next steps in terms of learning. Obviously, we've got a few more episodes in this series, but we want you all to be able to take them away in between sessions and in between recordings and sort of learn and study on your own, so that you're ready to hit the ground when these good opportunities come your way. As Misha and I have talked about on this podcast, it's a great time The last thing I want to sort of ask Shawn, one of my good friends here in the business, he's been key for my growth, and he has a lot of knowledge because he's been doing it, like you said, for 12 years. Really did a heavy amount of passive investing before he became a sponsor himself. I want to revisit something we've talked about a bunch in this last 3 sessions, which is how important it is to engage your sponsors and to have good conversations with your sponsors. When you talk with your sponsors, what are some of the key things you're asking them?
So one question that I want to make sure that you ask every single sponsor on the deal, and when I say every single sponsor, I'm talking about the core decision-making team, the people that are signing on the loan that have decision-making authority in the deal. You want to make sure that all of those people, whether it's one person or 5 people or 10 people or whatever it is, they're all on the same page as to what the business plan is. And the other piece of that is that there's somebody that's in charge. And that for 2 reasons. One, I invested in a deal as an LP some years ago. There were 5 people, there were 5 GPs on the team. I knew one of them well, and I did that fatal thing. I assumed, we all know what happens when you assume, that he had done his due diligence on all of them and that they were all on the same page. Well, he had done his due diligence. There weren't any nefarious people in the deal. There were just 5 lead GPs on that deal. And as you know, you can't have 5 leads. They all had different ideas on what should be done and how the property should be run. And the property management company got 5 different directions. And so they kind of threw up their hands and go, you know what, when you guys figure out what you're doing, let us know and we'll go back to work. And they basically did the minimum required by their contract, which, as you know, Misha, is nowhere near enough to make a property successful. Now, fortunately for us, it was during a time when if you could fog a mirror, you could make money in real estate. So that we were able to get out of the deal. We didn't lose any money. We actually made, I think, 28% in a 2.5-year period. So, but it wasn't the, more than doubling our money that they promised us. And it never cash flowed. They promised us, 9 or 10% cash flow, and we never saw a penny of cash flow. Yeah. And so for me, you want to ask probably not just one question, but a series of questions to figure out, is the team on board? Is there a business plan? Does everybody agree with the business plan? And, if push comes to shove and we can't decide on what the course of action is going to be, well, who's going to make the decision? There needs to be somebody on the team that says, I'm it. I'm the guy the buck stops here.
You've seen it. I've seen it. I think early learnings, obviously, in my investing as a limited partner, as somebody that was passively, air quotes, passively investing, learned the hard way, which is, you can have 5 really smart people, and that is not better than just having one clear decision maker and maybe even less smart people on the team. It's really important to have that one clear directive for the property management companies when you're engaging them. So thank you so much for that. I guess I'll leave with one last. That was really great on the strategy side. For a tactical question, what are some of the hangups people have on investments in their very first deal? What's 1 to 2 things where you consistently see people getting hung up on the process, and what are some ways they can mitigate?
Well, I mean, you hit the big one, which is the analysis paralysis, right? They feel like they never know enough. And I guarantee you will never know enough. You will never know everything. My neighbor down the street's been investing in real estate for 30 plus years, and he learns new stuff every day. I mean, his specialty's in 1031 exchanges. And he and I were having a conversation about what it is I do, and he was fascinated because he didn't even know about multifamily syndication.
Wow.
So there's one of the things I love about real estate. It's kind of a love-hate relationship, right? One of the things I love and hate about it is there's so many different ways to make money in real estate. You just need to pick one and go, you know what? I understand this. I like apartments at a high level. They're very simple to understand. Now, as you guys both know, they're not simple to go and operate. The basics are. I mean, but it's all the other stuff that happens around it.
Yeah.
That you've got to have that problem solving mindset. But I would say, as your first investment, if you're an accredited investor and you're able to invest 100,000, well, maybe don't put 100,000 in your first deal. See if they'll take less. Take 50 and try it out. There will be the other thing that a lot of people get hung up on is waiting for the best deal. You need to find a deal and a team that you feel like is going to get you across the finish line, and don't worry about those unicorn deals that are going to triple or quadruple your money, because if you ever see one and you get into it, you're going to go, it's going to ruin you, because you're going to be looking for those deals forever and you'll never find them. My first deal was kind of that way as an LP. We got 3.5 times our money and it cash flowed like 12 to 14%. I'm still looking for another deal that good. The key is I'm not waiting for another deal that good. I have a certain criteria that I'm going, okay, if I need this much cash flow and I need this much capital appreciation before I'll consider the deal. And then if it fits that criteria, then I'll go and underwrite it and spend a little more time looking at it. But you as the investor need to figure out what your investment thesis is, and does that deal fit the thesis or not? And if it does, and you get along with the team and you feel comfortable with the team, go invest in it.
Advanced tip here on this last point of Shawn's. As we've gotten better at being investors on the passive side and picking deals from other sponsors and really understanding what's going on underneath the hood, it's actually the deals that are advertised with more conservative returns, lower returns that are advertised out to the masses that tend to be the best deals. What really turns me on to an investment now is how thorough the underwriters were related to protecting the investment on the downside risk, not how big of a return there is. And typically when you see a really high preferred return, total return, sort of really short fuse on the return, those are actually the most risky scenarios. And you really don't know what you don't know in the beginning. So I wouldn't get too attracted to the numbers that seem like they're the highest when you've got sort of a series of emails from different sponsors. I think what you really need to get to is which group do I feel the most comfortable with? And that's going to come from like a track record and consistency in terms of being able to answer the tough questions.
And just a quick follow-up on that point, Gabe, one of the key things about risk is you can gauge the amount of risk roughly by the return you expect. So if you have more return that people are going, oh yeah, we're going to get you 20% IRR. They might, but it's going to be riskier than if somebody's getting you a 15% IRR. And you need to gauge that. If you've got, let's say you've got 2 investments you're going to look at and you're going to put 100K in each one of them, and you put 100K in that 20% IRR and, they lose your money. Well, you still got 100K over here in a 15% IRR. Again, like I say, you got to figure out what works for you.
And then lastly, so beyond that particular hang-up of analysis paralysis, one other hang-up you see a lot in a way to sort of help people through the process. Maybe something in the signing on to a deal process once they've mentally been committed, something you've seen where people get hung up and then maybe don't make it in time to invest.
Well, sometimes it's getting the money together, if they have to, I've seen deals where somebody wanted to invest, but they couldn't because they were waiting on another asset to sell and the timing just didn't work. That's not really a hang up, but I've seen that happen. I guess an objection standpoint, they're not comfortable with the illiquidity of the investment. And if they're not comfortable with that illiquidity, then they probably shouldn't be investing, or at least not at that, not at a high level. again, it's a balance, right? My wife and I are struggle with this balance all the time of we've got to keep enough liquid, one, to keep the lenders happy. And then two, we've got to be able to pay our bills, and we have bad habits that we have to support, like eating and sleeping under a roof, and all of those take money. So and I can't pay for that with my apartment investment unless it's cash flowing, and even then, that the cash flow is going to be small on the front end. So you have to kind of plan all that out. Don't if you got $1 million to invest, and that's all you've got to invest, and that's all you've got liquid, don't throw it all into one investment. Spread it around. Find 2 or 3 really good operators that have a good track record. I mean, that's what we do. We're invested with probably, I don't know, 4 different operators, and you'll learn over time after you invest with them. Yeah, the first one's the scariest, but I would say, do a little bit of homework, have some conversations with the general partner team, and then make an investment.
Absolutely. Well, that's a really good segue. So we're going to wrap up this episode in a moment, but just wanted to plug there for the audience that the next few episodes will actually sort of pave the way to better understand some of the key elements of investing, for a first timer, including taxes, and then sort of how to have the conversation with your significant other as we get in, to the crucial conversations about money. We'll wrap up that portion of the series with the State of the Texas Market 2024 podcast. And then we're going to hear at the very end of the season from 3 different guests, each one that has a little bit more experience than the next. So we're going to start off with somebody that has, in their beginning part of their journey, has really only invested in a deal. And that is a person that's near and dear to my heart. We're going to invite that guest on to sort of kick off a 3-guest speaker series. In the second guest, there's somebody that's sort of on the path. We'll call that somebody that's done this for a little while and hasn't quite reached financial freedom yet, but is starting to gear up. And then we want to get to the guest that has really been investing on autopilot and has figured this out alongside his very successful consulting small business or medium-sized business. This guy has done an amazing job sort of running parallel tracks between being a high net worth individual because of his business and being an even higher net worth individual because of his investments in real estate. So I just wanted to give that little preview. And with that, I'll pass it back to Misha to sort of wrap us up.
No, yes. Thank you, guys. Shawn, thank you so much for coming on. It was really great to get your insight and thought process on your first time investing and just the pitfalls to look out for. So we will definitely be bringing you on again very soon. And thank you all the listeners for taking the time to connect with us. And we look forward to answering any questions you have moving forward. And with that, we'll sign off. We'll see you guys next week.
Bye. All right. Thank you.
Thank you, guys.